Good morning, everyone. Welcome to session 4 of the Nonprofit Management Institute. We're almost to the finish line. We're delighted to have you with us today. We'll be discussing, going over the topics of financial management and fundraising. We've got a special guest with us today from our staff here at the center. I'll toss it on over to you to go ahead and give a welcome and introduce Tracy.
Great, thank you so much, Rebecca, and welcome back, everyone. We're so excited to see you, and it is, I think, our next to last session. So thank you for hanging in there and returning with us. We have a very, again, jam-packed session for you, and we have a special guest, Tracy Carriette, who is our Chief Finance and Operations Officer at the North Carolina Center for Nonprofits. She's one of our rock stars, and we appreciate her being here with us. I also would like to thank again the Guilford Nonprofit Consortium for being a partner with us on this series, as well as the Triangle Community Foundation supporting this, this project and this education series. And of course, Dr. Palmer, who has been our primary facilitator through this process. We want to thank you again, and we invite you to step right in. Thank you to Rebecca, Beck, and Leslie Morales for their support and work on this project. So without further ado, Rebecca, it's back to you.
All right, thank you, Jean. Thanks for joining us, Tracy. I also have my sidekick, Leslie, working behind the scenes. She'll be with us for the first half, driving the ship, and then I'll take over after that. So I'll go ahead and let Dr. go ahead and introduce things for us today, talk about our agenda. We're going to finish up a little bit of strategic planning, and then we'll get on with our topics.
Awesome. Thank you, Rebecca and Jean, and welcome again, Tracy, to our Institute session today. And as always, Rebecca and Leslie are helping us navigate mechanically all that we do over the next 3 hours. So without further ado, here we go. Our agenda for today, we're going to build in our introduction into our work because we have a couple of topics that I want to highlight to close out the strategic planning session. Then we'll move into our financial management topic, and then fundraising, do our eval, talk about the graduation next week. I know it's hard to believe, but our final session is next Tuesday. And then we'll do our official close for today. So again, thank you. And we're going to just kind of jump right into our work. Rebecca or Leslie, if you could go to the slide that shows the principles and practices guide. So just kind of move forward. Yeah, here. So this is the cornerstone of our work. This publication is what guides our Nonprofit Management Institute, and it guides our capacity building work. We talked about this on day 1 when we oriented all of us to the Institute and what to expect and just what our focus would be. So just want to remind you that that is what we are working around and with. And so just kind of as a reminder that this is how we do what we do. So thank you. So in terms of our review and reflection of our last session, if we could go to gallery view, that would be great. Well, good morning. Now I can see everybody at one time. Good to see everyone. I thought it would be good for us to kick off our session today by just reflecting on what you remember from the strategic planning session last Tuesday. You can unmute yourself and share that way, and Rebecca will be monitoring that. Again, introducing yourself, telling us the organization you're with, what part of the state you're in, and then kind of sharing what you recall from our last session. You can also place your comments in the chat if you choose to not use your microphone. And you can also, while we're having this dialogue, grab that next cup of coffee if that is what you if that's what you need at the moment. So I see Giselle, am I pronouncing it right? Giselle. She's holding up her cup of coffee there. I see CISNC. I saw that cup. Yeah. And there's Jane. she's got hers. So yes, if you would just kind of help us to just reflect a little bit by sharing what you remember about our session last week.
This is Monica from Safe Space out in Franklin County. I'm a morning person, so I have lots of energy. So one of the things I remember about the strategic planning process is that it is a process that has to have a plan to even begin. For us, the way I've applied it already is just having conversation with my board, explaining that we need to have a conversation about goals for the rest of the year that will help us move into that strategic planning process. And then just the different components that are entailed in the process of planning for what are our next steps as a organization, as a goal. The other thing I learned and remember is it's not just solely up to the ED to set this plan. And I think that was my biggest takeaway from last week, that it is a collective process that can also involve members of our staff that actually do the work and that are on the front line doing the work for the organization.
Thank you, Monica. Yes, all of that is very, very true. Using a 360-degree approach to engaging all your stakeholders in that strategic planning process helps it to be a lot more rich, and it also helps to not miss some elements of the work that you do. So thank you, and thank you for also sharing how you have already been able to put to practice what it is that we are doing here, because that is a part of what we intend, is that we want to show the how, definitely tell the what, but we also want to share and work with all of us on how to do what we're discussing as it relates to the North Carolina Center for Nonprofits principles. So yes, anyone else? I think there are some comments in the chat. Yeah.
Go ahead and share some of those. Julie, Cancer Services, and Winston-Salem discussion last week had her thinking about more about community assessment as they plan for transitioning programs, pandemic. Sean with Prevent Child Abuse Rowan in Salisbury mentioned the importance and relevance of assetting. And then Michelle mentioned from Life Around the Table, it may also be helpful to engage employees with a strategic planning worksheet to help them understand why strategic planning may be necessary. So getting that buy-in, right? We want to get everybody in the same boat with us, move forward. That's great. And then Heather with NC Coalition on Aging, the planning process needs to be data informed with many perspectives, lots of folks at the table. Terry with Muggsy Bogues Family Foundation, conducting needs assessment in various forms like focus and surveys. Had that big long list of different options for you all to consider based on the information that you're wanting to get back, and that you choose wisely based on that information. So you're thinking about the end result. Lisa Crosslin with Passage Home. You revisit the plan to make sure you stay away from mission drift. Yep. Very good. think that wraps up our chat. Did anyone else want to share? You can unmute yourself if you would like to.
Okay. All right. Awesome. Leslie or Rebecca, if we could put the link for the community needs assessment, the example, and the asset mapping toolkit and the virtual board retreat, if we could put those links in the chat, can we do that? Or and what I want to point out here is that we talked about needs assessments and asset mapping. So we are sharing some links with you for actual examples of those. And then a part of the strategic planning process are the virtual board retreats. And so that link is there also for you as a resource. So again, the community needs assessment, the asset mapping toolkit, and the virtual board retreat. And that virtual board retreat is really a piece of information that I'm providing for the group. And so if you follow that link, you can get a little bit more information about that. Again, as we're finishing up and wrapping up the strategic planning content, these are some additional pieces of information that we wanted to share. And I do believe we did have a request when we went back and looked through our evaluations for an example of the needs assessment and the asset mapping and so on and so forth. So I'm glad that we're able to share that with you as well. So we ended with looking at the work plan for each of the goals that are identified in the strategic planning process. And in the work plan, it really kind of pulled it all together. It brought all those pieces together. So in your handout packet, if we could all go to that, you have, it's titled Work Plan Example. It is, would be page 42 and 43. One of the documents there is, the handout is blank, so you can fill that in. And then the other is filled in. And so we went through how to write goal statements. We gave examples of a program goal as opposed to an organizational goal for a nonprofit. We also talked about and worked through an outcome statement to accompany the goal statement, and then action steps. And then we showed the work plan example. If you recall from Arlene and Thomas's sharing of their strategic plans, while they had somewhat of a different look, in principle, they were crafted using the same steps and the same process. And so when you pull all that together, you then have oftentimes a form of a booklet or a document, obviously with several pages, and you are able to decide what the layout will be. And so in terms of thinking about that, we have the strategic plan table of contents. So our topic, our next to we have 3 more topics. The writing and implementing of the strategic plan is pulling it all together and actually creating that table of contents. So if we could share the strategic plan table of contents on the screen. Now, your actual plan is obviously it's going to be different for each of your organizations. So you'll decide, what it is that you want to put in that plan. And so oftentimes there is a message from the president of the board. There's typically an executive summary. And there's also in that executive summary, or part of that is a message from the executive director, and or if that title was president and CEO, then that would be in that part of the plan. Some element or some way of communicating that the board has signed off on this plan is important to have as a part of bringing it all together. In addition to the history of your organization, a profile of sorts that really gives some background on what your organization stands for. You can include your mission and vision here, and so on and so forth. We also include the results of your needs assessment, your asset mapping, and capacity assessment in context, meaning we're sharing that as a means of informing what's in the plan. And so we explain that process in the plan as well. Also, around this section, this item number 5, you may also include how what process you use and the steps that you took to develop the plan. Then, of course, a review of the mission, vision, and values, the goals and outcomes, then those action plans, and then mentioning anything that you want to share going into the future. And then the final item here is any contact information, email addresses. You just kind of have that final page that gives ways for the reader to reach back out to you as an organization. So this is the, as I call it, the pulling it all together, writing the plan, and just putting those pieces together. You're also here looking at layout, design. What is the plan actually going to look like? And a lot of this has to do with what you can afford. So what is your budget for the plan? Plans are oftentimes uploaded on the website so that it's easy to access. We see nonprofits doing that quite a bit, or incorporated on your website somehow in different ways. So that's important to keep in mind. And then oftentimes there is this, in terms of writing and implementing the plan, sharing the plan with your different stakeholders at this point, once you've pulled it all together and it's all documented. So we can go back to the gallery view now. The monitoring and tracking, that is at your discretion. How you monitor and track progress. I encourage you to build in to your board meetings an opportunity to report out on how you are doing as it relates to your plan. And then assessing goal achievement. You're sharing that. Any success or lessons learned that you want to share, that is the monitoring and tracking. So writing and implementing the plan, that's the next step. Monitoring and tracking, the next step there. And then finally, the review and evaluation of your plan. So that's another area that we want to pay attention to when you're ready to redo the plan. Oftentimes our plans are about 3 years. I can remember a time when we were doing 5-year and 10-year strategic plans, and we have long stepped away from doing strategic plans that far out. 2 to 3 years is very, very typical, and so that's something that you want to take into consideration as well. So if we could go to handout number. I am wanting us to go to the handout that has all the steps on it. Let's see.
Is that in the
It's
DBR?
I believe it's in the handout packet. Oh, number 4, page 4. Mm-hmm. So if you go to page 4 in your packet, you will see our list. And so that's the 8 steps. If you could share that on the screen, this is just kind of the wrap up of the strategic planning topic. So we did quite a bit last Tuesday, walking through all of the different steps. So we started off with focusing on need and asset mapping and capacity assessment. We reviewed and talked about our mission statements. We did that in breakouts. You actually practice writing goals, outcomes, and action steps. You had worksheets and all. We analyzed our A goal, outcome, and action step combination by using the SWOT analysis. And then today, I shared with you writing and implementing the plan, monitoring, tracking, and evaluating or revising the plan. So these are our 8 steps. The other thing I'll say here is keep in mind the steps in principle are typically used by most who are facilitating a strategic planning process. The customization comes into play for your unique nonprofit and how you actually want to work through these different steps. So in principle, it would be the same for all of us, but in terms of specifics on how each of these are reviewed, written, analyzed, discussed, developed, all of that would happen unique. It would be real unique to your organization. We can go back to gallery. And are there any questions as we officially close out the strategic planning topic? Questions? No questions? Okay. We're all ready to go out and do our strategic plans. Yes. And I'm trying to remember who said remembering that we prepare to plan. Was it Monica? Prepare to plan. We have to plan before we plan.
Yes, yes, absolutely.
Yes, that is very, very true. We plan before we plan. We have to get ready and get geared up, for that. So that's important to keep in mind and to have patience with it. The strategic planning process takes on a life of its own, as weird as that sounds. We come out of the gate and we're ready to go. And there are different steps in that process where we have to rely and depend on others. And we have to schedule focus groups and interviews and doing surveys and all of that. And sometimes that can be a barrier to meeting that timeline that we've proposed. So I would say, have some patience when you're trying to manage this and carry it out. If there are no questions about strategic planning, we're going to take, Rebecca, just a quick transition break. And then we're going to come back and go right into financial management. So this would be a good time to kind of regroup and to get ready for financial management.
Sounds good. We'll see you back here in about minutes or so.
Yes. Yep.
Okay.
Mm-hmm.
I'll go ahead and pause recording.
Thank you. With our financial management topic, if we could go to the slide 12 of the PowerPoint. Financial management. So we have 2 primary topics today, financial management and fundraising. We start with financial management first and then focus on fundraising, because we know that a critical element of our fundraising being on point is that our financial management practices and the way in which we manage our finances should align with what it is that we're doing in fundraising. And so we start with this topic and then we move into the fundraising topic. So we've broken this up into 3 parts. The first part is a focus on financial transactions in terms of generating revenue and spending money or expenses. And then we focus on the internal controls and the audit. And then the third area of focus for financial management is the idea and the adoption of the practice of diversifying your revenue, diversification of revenue. And so that's where these will be our three areas of focus. Tracy and I are going to co-facilitate this part of our work together. You were sent a document that was titled Financial Management Handouts. And the first item on that list is budget. And then the second item is financial statements. And we directed you to print off pages of that information, specifically those 4 different financial statements. The IRS Form 990 is the third item there. And we're going to be reviewing and looking at that form. And then the annual report, we had you to see a link there. And then GAAP, or generally accepted accounting principles, we provided you with a handout there for that. So we're going to be looking at these different pieces of information on the screen in our packet of information, et cetera, et cetera. So this is kind of where we're going to go from here. The first thing, if we could show the budget, the actual example of the budget filled in on the screen. In thinking about managing your finances, a couple of areas or places where these directions might be is it might be in your bylaws. You may have some guidelines as to how to manage your finances there, pertaining to your finance committee, the treasurer of the board. Some of your organizations may also have several staff that focus on the financial management of your revenues and expenses and transactions. And so the guidelines and the policies are generated in those ways. Your board either has had those established, the organization, you as an executive director may find yourself modifying and adjusting what the protocol is in terms of generating revenue and also spending dollars. You may have some guidelines around, who signs checks and at what amount, and all of those things are pertinent there. And those are going to be unique to each of your nonprofit organizations. So what we're doing here is we're going to start with just looking at this sample budget. And what I want to pose is a simple question. We're getting a request to make the image bigger. There we go. And you also, if you have at your disposal, you may not, but if you have it at your disposal, the budget for your nonprofit, you can also reference that. But we're showing this in terms of just kind of getting us started and thinking about how our dollars are managed. When you look at this particular sample budget, what do you see? What do you see at play here? And you can unmute yourself and share, or you can put that information in the chat. What do you see when you look at this budget?
A comparison of multiple years across line items.
So we're looking at years here. We're looking at the actual to date. We're looking at projected end of year, and then we're looking at the annual budget. So where we are 9 months in, what we're projecting for the end of the year, and then in terms of what the budget was, right, at the beginning of this year for this organization. Anybody else? What do you see?
Yeah, I see the separation of revenue and expenses with very specific budget line items to report on in the budget.
For sure. So we've got two different sections to this document. And we don't take for granted in our training that everyone understands budgets and knows how budgets are put together. So yes, the budget is divided into two parts, revenue and expenses. What else do you see?
I see that it also, and looking at what you're projected and sort of where you are, kind of assesses if you're on target, if you need to keep going, doing what you've been doing, if you need to take a pause, redirect, kind of thing.
Okay. Thank you. Anyone else? What else do you see?
In-kind revenue.
So there is a place for us to identify the in-kind support that we receive.
Is that common?
Oftentimes, yes, and it has a lot to do with the frequency of in-kind, because some nonprofits don't see that a lot, and then some do. Tracy, do you have a comment about in-kind revenue? And
yeah, I think just going along with what you said, Dr. Palmer, is it can depend for each organization. And you can include it in your budget if you know going into the year that you're going to have that. Sometimes planning a program, you don't realize that you're going to get some kind of in-kind service. But it's one of those things that would definitely show up on your audit. And so, if you're aware of it, tracking it in your budget, and depending on how you budget, whether it's cash or accrual, that may impact whether you see in-kind revenue and expense on there as well. So it does kind of depend based on your organization.
do you want to speak to cash and accrual, like the difference in that?
Sure.
Okay.
So some of you may do this as well, but at the center, we actually report on both the cash and accrual basis because our budget is prepared on a cash basis. And when we talk about cash basis, that means that you're looking at revenue expense when you receive the revenue and the expense when it actually goes out the door, versus accrual, you're going to be recording revenue when it's awarded in terms of like a grant, even if you haven't received it yet. And then expenses when they're incurred. So that's the basic difference between cash and accrual. And with accrual, you might have some deferred revenue if you've got programs that are happening in a previous or in a future fiscal year, but maybe registration has been opened in the current year that you're in. And the same with expenses. Any expenses that would be for that program that's in a future year would be prepaid expenses. And so that's some of the difference between the cash and accrual. We could certainly have a whole conversation on that.
Yeah, thank you so much.
Dr.
The
Palmer?
other thing, yep.
Sorry, can you rewind just a little bit? This is literally, I saw the in-kind language for the first time in my life, literally this week, maybe yesterday or Friday. So this is all new to me. I'm in a whole brand new world. Is that when people, I guess this is the way I took it, is that when, like, I guess money or incoming money that it's being not donated, but like kind of like given, or like, for example, like, oh gosh, I don't even know where to go because I saw it in a budget sheet. And so obviously I just saw it, I didn't ask questions, but would it be like, if I'm doing an in-kind on my budget sheet for something, that's like I'm projected the value of whatever service I'm giving to another organization, is that what it is? Or
It's
feel
the
free to
other way,
correct.
it's the other way around. It's in kind to you or to your program or to your nonprofit. So it's those. So for example, if your nonprofit receives ongoing donations of baby products or clothing or food or any of those types of things that you're receiving and you're not, and it's being donated, you can identify the value of those donated items, and then that becomes the in-kind revenue.
Okay. Okay. So it's
And
what somebody is giving to our organization.
yes.
Okay.
And Tracy, I'll let you comment maybe how the center does its in-kind.
Yeah, I think the other thing about in-kind that's important is that when you record that, it needs to be based on the value that's been given to you. Or sometimes you might have to do research. But for example, if somebody is giving you an in-kind service, you should get something from them that says, this is the number of hours that I donated in time to you all, and this is the rate. So this is the value of the in-kind service that I'm providing. And oftentimes, again, not to confuse things because we probably don't have a lot of time to go too deep into this, but you should see in-kind revenue is usually offset by an in-kind expense as well. So because somebody is giving you something, it's revenue, but if you were paying for it, you'd have it as an expense, if that makes sense at all. So don't be confused if you were to see that like in an audit or even in a budget where you would see in-kind revenue and in-kind expense, and they're the same amount and it's related to the same thing. It's just the way that you track that in accounting.
Thank you. And the last thing I'll say about the budget is look to the far right, the proposed 2024 budget. Remember, this is a sample. What I like about this example is that it uses very small numbers. And so it's easy to kind of wrap your head around, just the logistics and the thought behind and the principles applied to when you're actually setting up the budget. Could you move the screen up some so we can see the expense part? Yep. So you see the total revenue here is 9842. And if you keep looking down at the bottom, you'll see the expense is 9833. And so total expenses are less than total revenue, right, Tracy? So that's good news in how this budget is being proposed, because we definitely don't want to see a deficit. We want to see a surplus, even if it is, I don't know, what is that, $10, $9, or however much it is. But that's really the goal there. So kind of moving along to other financial documents. So this is our budget. In your handout, we provided you a budget worksheet or a budget template there. And so you should, I hope I'm right about that. I think in our wraparound, we provided the template. So you should have, yeah, thank you, Julie, for showing me that. Thank you. So we have those two items. Literally, you can Google images of budgets if you just want to explore, just different ways in which budgets are definitely put together. You can do it that way. Next, we want to review 4 different types of financial statements: a statement of financial position, a statement of activities, statement of cash flows, and a statement of functional expenses. And we're using an example from a nonprofit organization that's not even located in the state of North Carolina. So we just wanted to kind of be far removed from the data part of this. And so in terms of that, we're going to start at the top, and you have the link there for these documents. If we could we, yeah, we're looking for financial position, statement of financial position. That should be at the top. Right here. Okay. So in thinking about the statement of financial position, this is an indication of what our total assets are. It outlines our current assets, any other assets that we have. So it's showing all that we have in our possession and the value of that, and allowing us to see one way you might think about this is net worth. So what are we worth? And Tracy, I'm going to pass it on to you in terms of some specifics about that. Notice you'll see grants receivables in there as a part of the current assets, and any contributions that we are receiving as well. Tracy.
Yeah, so again, the assets, like Dr. Palmer said, is just, it lists your resources. It's what you have or what's owed to you, which is why you see receivables showing up there as well. And then any property or equipment that the nonprofit organization owns is going to be included in there as well. So it's everything that you have or what's owed to you.
Okay. Any questions about the statement of financial position?
Yeah, and Dr. Palmer, sorry, I'll just add that the rest of this document is going to show liabilities, so that's your obligations, things that you owe to people. And then, like you said, the difference between those two is the equity or the net worth, which is essentially what this financial statement is going to show.
And we can scroll over to the next page, Tracy, so that you can highlight those. Yep.
Yeah. So this under liabilities is where you would see anything that you owe to others, whether it be current liabilities or long-term liabilities, which here is a lease, for example. It could be a loan. If any of you have gotten a PPP loan, for example, you might see that show up under long-term liabilities until it's forgiven. Sometimes you'll see accrued expenses or liabilities related to salaries. So if you offer annual leave and you were to pay that out when an employee leaves your organization, then that would show up as a liability here on your balance sheet because it's something that you technically owe to your employees if they were to leave. So those are some examples of things that you would see there. And then net assets, again, that's going to break down by unrestricted and then restricted. So temporarily restricted might be for a grant you receive that's restricted by time or purpose. And then permanently restricted usually refers to like an endowment, something where you might have access to the interest, but not to the principal balance of what was given.
Are there any questions related? And if you want to post your questions in the chat, you can do that too. Are there any questions related to the statement of financial position? One of the things that's very helpful, this is a helpful piece of information when you're thinking about launching a capital campaign, or you're thinking about launching a campaign in general. What is your current financial position? Because what some of your major donors want to know is your ability to sustain your organization over the long term. And so being able to share your financial position, in particular from an assets perspective, can add credibility going into a campaign. So that is important. I don't know, Tracy, if you have any thoughts about that or not, but as we're learning about financial management, I'm always very mindful of how financial management should align with fundraising, because oftentimes we need to fundraise, or we need more money. And yes, that may be true, but how are we managing our portfolio is also just as important. So I don't know if you want to speak to the financial position in alignment with writing grants, securing contracts, etc.
I don't have anything else to add there.
Okay.
I think, like you said, it's important to make sure those things align as you're planning and looking at the financial stability of the organization.
Okay. Any questions about financial position before we go to statement of activities?
We have a couple of hands raised.
Okay.
Arlene, do you want to go ahead first?
Yeah, Dr. Palmer, since you mentioned this particular statement is good to show if you're starting any campaign. When I think about YMPN, for instance, we don't have, we don't have a building, we don't have equipment per se. All of our work is intellectual property and more in line with those things. Knowing that we have intentions of launching additional campaigns throughout the year, do you suggest that this is still a good statement, or maybe is there another example coming up that would be better to use for us?
This may not be in that case because it is a highlight of your assets. And so if
Right.
you don't have any, then this may not necessarily be one that you would showcase. You would probably want to begin thinking about maintaining a report like this, though, to
Okay.
have handy, because you never know. Someone may call you up and say, hey, would you like this building over here? And then all of a sudden you have an asset. So I would just keep it top of mind, but it may not necessarily be one of those financial reports that you're generating at this time.
Okay, thank you.
And a question from Veronica. Go ahead, Veronica, you can unmute.
Hi, thank you. Yes, so I'm fairly new as well to just the financial aspect of nonprofits and now kind of being thrown into heading it up. I'm just trying to understand a little bit more about the lingo. Is there some kind of a financial literacy handout or reference manual just to help understand what some of the terminology is and what they mean?
Rebecca, I'm getting ready to give a name of a book and author that I like, and you can put this in the chat for me. The reason I like this book is because it breaks down each of these statements and it gives you quite a bit to explain each of these different components. So the name of the book is, go figure, Nonprofit Financial Management. Nonprofit Financial Management, a Practical Guide. And the author is Charles K. Coe with a C, C-O-E. Charles K. Coe, C-O-E. And the name of the book is Nonprofit Financial Management, a Practical Guide. And I referenced that book quite a bit in relation to, and there are others out there, but that's the one that I like.
Thank you so much. I appreciate that.
Mm-hmm. Yep. Okay, we're going to move on to statement of activities. In terms of this particular organization is actually showing a comparison with the 2017 year. But if you hone in on the 2018 section of the report, so here we're looking at revenues and other support. So in this example, and this is an actual organization, by the way, the organization is Big Brothers Big Sisters of Massachusetts Bay. And if you go to their website, the reason I chose this example overall, and then I'll get back to this, is because when you go to their website, you can find their audits, you can find all of their reports, everything is on the site. And so that way you can look to see what I would call a pretty comprehensive, I'm careful to say well managed, but an indication of the consistent reporting and the documents and all that we're talking about. You can find this on this nonprofit's website. And so that's why I chose this example. But at any rate, so the statement of activities, we're focusing on our revenues and our expenses, and we're looking at those particular items to show us, in this particular example, changes in the assets. But I wanted us, Tracy, to focus on the unrestricted, the temporarily restricted, and the permanently restricted as we look at those dollars coming in, and then of course, according for expenses, those dollars going out. And so I'll let you take it from here.
Yeah, and I think someone in the chat may have been referring to this. So I'll just point out that now you'll start to see these statements of activities, instead of showing temporarily restricted and permanently restricted, you'll see it saying without donor restrictions and with donor restrictions. Same on the statement of financial position or the balance sheet that we were just looking at down at the bottom. That's a new standard that nonprofits are starting to implement on their financial statements. So without donor restriction is unrestricted. That means that that money coming in can be used for anything. It's not restricted by time or by program. What I mean by time is you could get a grant that is for general operating. It could be a multi-year grant or it could be a year-long grant. And so you have a certain time period in which you have to spend that. So that would be restricted by time. And it would show up in the column that would be with donor restrictions or temporarily restricted. Similarly, I gave an example in the chat of a restricted grant. So it's for a program or an event. It's been designated to that. So it's going to be restricted for that particular program. And then where you see it switch into this unrestricted column or without donor restricted column would be when it's released from that restriction, or when that event happens, when that program concludes, when that time period finishes. And so that's how you'll see revenue broken down by these different line items. You might also see, well, they've got corporations, foundations, government lumped together, individuals. And then in expenses, you'll see it's broken down by program services, general and administrative, and fundraising and development. So we'll talk about the functional expense, I think, in a minute. So you can see, again, the revenue that came in for the year, the expense that went out, and then the change in assets, which is the difference between those two.
Any questions about the statement of activities? Okay, let's go ahead. Tracy, I'm going to have us go ahead to the functional expenses, since you kind of stop there. Yeah, that's next. Okay, that's good. We can keep going. Yep, right there. You can just go right into that.
Sure. So the statement of functional expense, a lot of organizations need this for their 990 anyways, and so it gets put into their audit report as well. And so this is where you're just breaking down expenses by purpose or program. And so in this case, they've got one program line item. You might see on your functional expense where it lists several programs. So I'll use the center as an example. We would have one that's Champion the Sector, which involves our advocacy and public policy work, and Innovate Learning, which is going to include expenses for programs like the Institute, our annual conference, the webinars that we produce every year. So you can get more specific in your program services and have a total, then your general and administrative, and then your fundraising and development line. Your functional expense can help you track real costs of programs because you're looking at expenses that are directly related to those programs. And then again, not to get in too much into the weeds, because we could do a whole nother session on this, but it also allows you to spread indirect costs, which are costs that are not tied to one program or purpose, like rent, utilities, your CEO salary, because they're responsible for oversight of the entire organization, to be spread across your programs. And there are ways that you can do that that are considered acceptable. So time records of your employees. So taking a percentage of the amount of time that your employees spend in a particular program. You could use that as a percentage, excuse me, for example, to spread your rent expense across programs. So those are ways that you can use the functional expense and kind of what goes in to preparing that. But again, you're just looking at expenses by program, what expenses that are used for a particular service or program that you're offering.
And if you notice in this particular report, functional expense report, it has 3 areas. The focal points are 3 areas: program services, general and administrative, and fundraising and development. I think it's helpful, in particular, if you have grants, a significant number of grants or contracts, or a significant amount of your budget is going to be met through grants and contracts, to have that program services broken out so that it's very clear what is for programs, and then the general administrative, because oftentimes the general administrative dollar amount in your budget is typically not covered through grants or contracts. And so you're raising money probably to meet those expenses. Now, in this particular report, for whatever reason, they've decided, right, that fundraising and development needs its own, it needs to be reflected in these expenses, maybe because it's at the tune of $880,000 in payroll, and that is a significant amount of this budget. So I don't know, Tracy, if you have anything else to say about that, but I just wanted to highlight that this particular organization, what you would take away, definitely highlight programs and services, yes, and that administrative cost. So it's very, very clear where those expenses lie.
Yeah, and usually you might hear someone refer to the general administrative and the fundraising and development as support services versus program services. And we get this question a lot. Someone might be thinking it, so I'll throw it out there. We always get the question of what should the percentage of program services to sort of general and admin and fundraising, or those support services, what should that be? What's a good benchmark? And the answer is it really depends on your organization. I would encourage you to be thoughtful and transparent about how much it costs for you to run those programs and your true administrative costs. I know that I think funders like to see a higher program service percentage amount, but really you want to show what's reflective of your organization, because we want people to understand that nonprofits have general expenses just like businesses do, and there's no way around it. And we of course we want as much of our dollars to go towards our programs, but it's really important to recognize that. So there really aren't, you might find benchmarks out there, but I think we always say it really just depend, and it is unique to each organization and how they're set up. So there's no easy answer there.
Okay. There's a comment in the chat, and I don't know that fact right off, so I can't confirm or not.
I was gonna type
that. Yeah.
I'm not familiar with that requirement. I can say that traditionally ours is not 80-20 program. It's more 70-75. But it depends from year to year. Even it can change just depending on what you're doing. So I'm not sure that I wouldn't say with 100% confidence that that's a requirement, but I don't think so.
Okay. Any questions about the statement of functional expenses? The other thing I'll point out too, if you're using QuickBooks for nonprofits as your financial management tool and software, it will generate these reports for you. So I don't know, Tracy, if you want to comment on QuickBooks before we get to cash flows, but.
Yeah, we use QuickBooks at the center. I know a lot of nonprofits do. And we use what QuickBooks refers to as classes. to track our different programs. So when we enter an expense, we can pick a particular class that is aligned with a program of our organization. So at any point I can pull a profit and loss, revenue and expense, statement of activities, whatever you want to call it, by class, which means it's going to show me all the expenses by program service. So there's a lot of things that QuickBooks can do to help make your life easier if you're using that.
Okay. Any questions? Rebecca, do you, I see your, yeah.
When I pop my video up, you know that
Yeah.
I'm going to interject.
Yep.
Yeah, and well, a couple things I did want to mention. We do have some QuickBooks trainings that are coming up in May, I believe. We partner with them to offer those. So we can, if you're interested in that, just let me know. I can include information about that. We did have a couple questions. In particular in the chat I wanted to just cover before we moved any further. One of them was from Heather asking whether or not there's maybe a target where organizations want to be in terms of liabilities versus their assets ratio.
You're muted,
I think you're on mute, Tracy, sorry.
Sorry, trying to cut down a background noise at home.
Uh-huh.
I know that there are tools out there that will help you calculate that ratio. Off the top of my head, I don't know what's considered, a target area. But what we might be able to do is find a resource that will help folks calculate that if they're interested, and share that after the fact.
Okay, thank you. And then the final question too is just sort of getting back to in-kind revenue and the explanation of why we need to show it as an expense.
Yeah, and I think someone chimed in. It shows we show it as an expense because it's a truer picture of what our programs accomplish and cost.
Right.
And so I think that's a good explanation of why it's going to show up on both the revenue and expense side. Because even though you didn't have to pay for it, you might not be able to provide that service fully if you didn't have that in kind. Otherwise, you would have had to cover that expense. So it just gives you a true picture of the cost and, as Ashton said, of what the programs accomplish.
And when you're working on your budget, when you're doing the budget, you want it reflected in the budget, even if it's in kind. Let's say you've been getting that same resource, if you will, for 5 years in kind. You still want to know what it would cost you in the event in that 6th year that resource is not available to you anymore. So it's important to actually keep up with what the real cost of things in nonprofit settings. Oftentimes we'll miss that because we're like, oh, this is a donation and thank you very much, and we kind of move on. And that's great on the receiving end of donations, but on the financial end, that person that's managing your finances, they need to be aware of that, especially when doing budgeting, because if not, then you're developing a budget with it not reflecting, as Tracy said, what the real or true cost is to actually, let's just say, implement that program from A to Z. Okay. All right, cash flows is our next document or statement, financial statement that we're focusing on. Some nonprofit organizations generate the cash flows statement or report every month, just like it would be a part of the financial report. Some don't. I think it's healthy for your board to know how much cash is on hand, because you just don't ever know what might come up in terms of a significant expense. And so I think it's good for everybody to be in the know as it relates to that. And if you can provide this from month to month, even if you, let's say you're showing a deficit for that month, your cash flow may still be intact. So, you know, you may have a deficit of $5,000 this month for whatever reason, but when you look at your cash flow, you're okay. So Tracy, I'll pass it to you.
Sure. So this statement again just shows the changes in cash. In this case, it would be over the year because this is what's showing up in their audit. So it's showing where the money went. And so to Dr. Palmer's point, we actually use a slightly different version of a cash flow schedule in sort of our month-to-month, day-to-day planning. And so we have a spreadsheet where we break the revenue down by type. So foundations, contributions, whatever the revenue is. And then we show what we expect to come in from month to month. So as Dr. Palmer said, we can see what's our cash flow from month to month. How are we doing? Are we going to be able to cover expenses? How long of a runway do we have before our cash flow might start to dwindle? So we enter revenue by type by month. And then the bottom of that is we look at expenses just sort of overall. We don't break it down by line item, but we also look at what expenses are going to go out the door every month and what is our cash balance going to be after those things happen. And so we try to estimate that as part of our budget process. And then every month, I compare that to what actually happened. So we're keeping track, as Dr. Palmer said, of the cash flow from month to month. And so this one is probably more typical of what might show up in your audit prepared by your auditors, but it's essentially doing the same thing. It's showing where the money went and tracking the changes over a period of time.
So what I think I hear Tracy saying is that you may develop your own tool for doing this tracking. And this is where a lot of us in the nonprofit space, this is where we're challenged because oftentimes as soon as our dollars come in, we're spending them. And so we may say to ourselves, well, why do we need to keep a cash flow report when I know there's no cash? Right? But the reporting is a management function. The reporting is that we are managing what is happening as it relates to cash flows. As Tracy said earlier, we're being real transparent about that. So if that is the truth, and that is true, then share it with your key stakeholders that are helping you to manage your finances. So just because we might be having financial challenges doesn't mean we don't do financial management. That is not wise. So we still want to do financial management and we still want to do financial reporting. Tracy, I don't know if you have any thoughts around, you know, a nonprofit that is financially challenged and, you know, how this whole idea, not just of cash flow, since this is our last financial statement we're going to talk about, but any of these reporting when there is a financial challenge, because sometimes we'll set aside practices that we might use when we're feeling really great about our finances and profit is there, surplus is there, as opposed to not.
Yeah, it's always important to monitor regularly all of these things. And I would argue it's almost even more important when you're in challenging times. Every nonprofit is going to go through that. I've been at the center for a long time, over 20 years, and you see the ebbs and flows from year to year. And so when it's challenging, it's more important to be tracking that. Like I said, just because you need to fully understand the financial situation of the organization. It helps you with planning. It helps you be transparent with the board so that they understand what's going on. And related to the planning, it could help you strategize on possible options to turn things around. And if you do have some cash flow, if it helps you float along for a few months until you can get that revenue and expense better aligned, then you'll know that by preparing these on a regular basis and reviewing them with your board and your leadership team. So somebody added in the chat, it helps you determine if you can apply for reimbursable grants. So it sounds like that's another way that this will help. I'll be upfront. The center doesn't get government grants that are often reimbursable. So that's not an area of specialty for me, but yeah, that's another way that tracking this can just help you in planning and understanding where the nonprofit is, because you don't want any surprises.
And what I will say to that comparison, some of our nonprofits are receiving grants and they also have government contracts. So the dollars that they're managing are coming in the door in two different ways. What could happen, and you want to steer away from this, sometimes our funders that are awarding us grants, their approach to managing the expenditure of those grant dollars is very different than a contract, let's just say with your city government or with your state government, like a Department of Health and Human Services or some of the other departments. That is a very different, though the way they track and the way they monitor is different. And so if you are going to pursue contracts as opposed to grants, you want to make sure you know what you're getting yourself into. Typically there are, it comes with a manual, it comes with guidelines, it comes with a very formal way of submitting for reimbursement. Sometimes it even requires you having a staff person that's what they do, is monitor those contracts to make sure that those dollars are being recouped on a schedule. Because if you get off schedule sometimes with contracts, you may not be able to get the money. You may fall short. So there is a distinct difference in, let's just say, private grants like a United Way or a foundation grant, as opposed to, let's say, a government contract. So just for those of you who are in those executive director roles, or if you're on a board and you're in this cohort, you really want to know, well, how many grants do we get? How many contracts do we receive? Because there is a different way of acquiring those dollars or getting those dollars in, depending upon what the source is. I think I saw some things popping up in the chat, so you all will have to help me with that. Rebecca.
Sure thing.
I just saw the light kind of flashing at the bottom of the screen.
So Terry was asking, can you tie in this on cash flow in the fundraising section in terms of how to solicit donations and sponsors when cash flow issues exist? What do we tell prospective donors and sponsors? How will it look to a donor?
I say transparency is the best way. Now, the culture of your nonprofit has a lot to do with how you approach this. There's no one way to do it. My rule of thumb, and I think I heard Tracy share this as well, my rule of thumb is to be transparent. If you have a cash flow problem, talk about it and begin to figure out how you're going to work your way out of that particular dynamic, because your board can help you. And donors definitely, depending upon what kind of exchange you're having. If you're having a one-on-one ask, or you're making a call on a donor and it's one-on-one and they're asking you specific questions and they're about to give a major gift, they deserve that understanding and knowledge. There is and I think it's in your handouts for fundraising, there is a client's donor bill of rights piece of information that highlights how we should interact with our donors and what they have the right to know. I say honesty is the best way to do that. Tracy, I know you mentioned that earlier, but.
Yeah, I would definitely agree with that, Dr. Palmer.
So I don't know who asked the question, but I didn't have to wait to answer to answer that. That is a, you know, let's be transparent. You know, these are individuals that are giving dollars to your organization with the expectation that you're going to be a good steward of those dollars. And if out of the gate you're not disclosing, you know, what the real situation is, then I consider that to be somewhat problematic.
I think that's all we have. for
Okay.
questions.
Okay. Okay, so Tracy, we're going to move to the 990 document. And I really just want to highlight here that the expectation is that every nonprofit will submit a 990 to the Internal Revenue. And that 990 is submitted based on the agreement that your nonprofit made with the IRS when your nonprofit filled out the 1023 application. So the 1023 application is the IRS's document that if you were starting a nonprofit today, you would have to fill that document out. And in that 1023, you indicate what your tax year is going to be. If it's going to be, you know, end of May or 1st of June or 1st of July, some are October to October. I mean, it just varies. So you would have indicated, or maybe some folks before you would have indicated in the 1023 your tax year. And so every year you are expected to complete this report, this 990 report that gives the Internal Revenue a picture of how dollars transition through your organization. And I'm just going to highlight what's in the what the different sections are, and then I'm going to let Tracy speak to any particular sections that she deems salient at this point for you to highlight. So on this first page, you're giving the name of your organization and what your mission is, and all of those kinds of things. So that's in the demographic kind of information, where you're located. Then in part one, you're given an indication of what your mission is and what kinds of activities or work you are participating in, and you're given an indication of what those dollar amounts are there. So that's activities and governance and revenue and expenses. So Tracy mentioned earlier that you're using those financial statements that you've been keeping record of and reporting out on all year. You're using that information to help you to insert information into the 990. Part two is the signature. That's where you sign the document. Part three is a statement of your program service accomplishment. So you're telling your story, you're sharing success, and definitely this information is probably already in the public domain anyway. You have this information on your website. You have this information in your strategic plan. You have this information throughout other documents that you have made available to the public and your stakeholders. And then in part four, you are giving a list of just really overview information about your organization in terms of different schedules that are required, or other documents or pieces of information that's required. And then in part five, you're giving statements regarding your filing and being in compliance in terms of taxes. When you get over to section 6, this is a focus on the governance and the management of your organization. So your board of directors and how many members you have and voting and all of that, your policies, and the disclosure of information about your nonprofit is in section C of part 6. When you get to part 7, this is a list of your officers of the board of directors, your highest paid staff. All of that information is listed in part 7. And then in part, and also individuals that you contract with are in this section. And then in part 8, this is the statement of revenue. So this is real specific in terms of revenues that have come into the nonprofit organization. And then section 9, we just talked about this statement of functional expenses. So you're asked to provide that. The balance sheet or profit and loss is also in section 10. And then 11 is a reconciliation of your assets. And then finally in section 12, you have an overall reporting as it relates to your approach to how you manage your finances. Tracy, I'm passing it over to you. I just was giving what the document has in its entirety.
Sure, and I'll just add a few things that going back to that first page, you can see part 1 is just kind of a summary, a snapshot of everything that follows behind that. So it's just a good quick summary for funders and the general public, because remember that 990s are open to public inspection, which means that funders and the general public can find these documents on like GuideStar. A lot of nonprofits put it on their own website. And before I go further, the only thing I was going to mention about the 990 is there are sort of benchmarks about what type you should file. So there's a postcard, there's an EZ form. This is the standard 990 form. So there are some benchmarks that tell you what your organization would be required to file for the IRS. Scrolling down to the next page, the part 3, Leslie, the statement of program service accomplishments. As Dr. Palmer said, this is the place where you get to tell your story. And I just wanted to take a minute to reiterate that. Again, because the public can see this, you want to use this as an opportunity to tell them about your accomplishments for the year and your program areas. And these sections are small, but don't worry, if it's longer, it'll say see attachment and it'll be in the Schedule O, because that's sort of the Schedule O, and it mentions that up at the top. You can see is sort of the end all schedule to where you can go into more detail about the questions that they're asking. So take the opportunity to tell the story, tell your accomplishments that you made throughout the year, because it's a great place to be able to do it as a public document. Scrolling down, there's just a lot of questions in the next couple of sections that help determine if there are other schedules of the 990 that your organization is required to complete. And then jumping to the governance section, I think here I just wanted to mention this asks a lot of really important questions that I think you would see show up, for example, in principles and practices around sort of best practices. It asks you, do you have like a conflict of interest policy, a whistleblower policy? And you may say no to that. There's no kind of penalties for that. But I think from a best practices perspective, those are all things that you want to have within your organization. Conflict of interest we give to our board and staff every year, where we're asking them to disclose any conflicts of interest that they might have. Document retention and destruction, again, just talks about, how you handle retaining documents and how long you have to keep them, what's okay to get rid of and how. So those are all policies, again, that nonprofits should have.
And one thing I would say too, we're very familiar with the conflict of interest policy, but if your nonprofit works with a population where, let's say you're providing therapy or counseling and you have very delicate information, you may also want to consider a confidentiality policy.
Absolutely. I'm just scrolling through to see if there's any other sections to highlight.
There was a question about the EZ, like the Internal Revenue actually guides on whether or not you qualify for doing the short, I say short version versus the long version, the easy version. And it's in the very front of this document that we're looking at here. There's an instruction guide that goes along with this that explains every section. I think I saw that question in the chat.
Yeah, you did. And I'm going to put in there, because I had pulled up a link actually while we were talking about filing requirements from the Council of Nonprofits. I'm going to put that in there because I think that'll help. Also on the IRS website, it will break down, like the postcard is gross receipts that are 50,000 or less. And so it breaks down what thresholds have to be met to determine what form that you use. I think that's it on the 990. Again, I mean, this could be its own day-long topic. Yeah. The last thing I think I'll say is the sections about the statement of revenue and the balance sheet and those things. If you get an audit, and you use a CPA firm to prepare this, they just pull that information right from your audited financial statements, all those statements that we looked at earlier in the session, and just dumps it in here. So it's just looking at the numbers just a slightly different way on this organizational tax return.
Okay, are there any questions in the chat, Rebecca or Leslie, that you see that we need to address before we finish up our financial management topic? We've got two more things to talk about here.
Nope, I don't think so.
Okay.
There.
Okay, great. Rebecca, can you go?
Hold
I'm
on.
sorry.
Hold
Okay.
on. Going
Okay.
back to the 1023, just wanted to confirm what is one more time.
So the 1023 is the application that you fill out with the IRS to start a nonprofit. So if you're going to start a nonprofit, it starts with that form. And I don't know how many years back it's dated as to when the IRS started using that particular form. But it is, it kind of feels like the 990 almost, except you are making the case to set up a 501c3.
Right.
How many of us have started a nonprofit before in the, can you just use your reaction just to kind of show if you've ever started one?
Got a couple of
I know Jean has started one before years ago. But you know, there, if you started one, then you would have had to complete this 1023 form. Okay. All right. Any other questions?
A question about finding the original 1023 that was filed if your nonprofit has not received a copy of that form.
Good luck with that. If it was over however many years ago. I don't know how long it would take you to get a response back from the IRS for that. I don't know. I've never requested the original application. I've reviewed like bylaws, like from the 1960s. I've seen bylaws that old, but I've not seen an actual 1023 app for, let's say, an organization that's 100 years old. I don't even think 1023 existed, you know, back then. So I don't know. You might go back to the originator, you know, whoever started it, and they may have that, but I don't know. Tracy, what were you gonna say?
I just Googled really quickly, and I'll put a link in there. There's a form that you can fill out with the IRS, but as Dr. Romer says, who knows how long that's gonna take and how far they go back. But it does at least give you a form name and where to send it to see if you might be able to get a copy of that. So I'll put that link in the chat.
And it may be out there. I actually, like within the past year, have seen bylaws that were typed on a typewriter, like, you know, so if that, I mean, so it may, you may be able to get your hands on that. I'm not sure. Okay. Rebecca, can you take us to the Big Brothers Big Sisters site? We're going to look at the annual report. So all of our organizations are expected by the Secretary of State's office in North Carolina to submit an annual report to them. It is a best practice to do an annual report every year. Now, this annual report that Rebecca is highlighting here for us is pretty sweet. You know, it's electronic. You know, it is, I do believe you can download this and you can, and it's also kind of a visual moving type of document too. But this is an example of an annual report. The NC Center does an annual report every year. But I wanted you to just see how this particular nonprofit, there's, at the time of this, it was 70 years old in 2018. So this organization is pretty old and been around for a while. And so you may see some elements of their annual report that may not be in your reach in terms of format and design and all of that. But the idea is to write, develop, create a document that highlights the financial activity, the program activity, the work of your nonprofit over the course of your fiscal year. And Tracy, I will let you talk a little bit about the NC Center and how you manage this.
Yeah, and I would just say, again, it's another way to tell your story for the year. Ours is similar, as Rebecca was scrolling through and I was looking at ours. You know, we talk about highlights from our program areas. We show them the breakdown of where our revenue came from, the breakdown of expense, and how that was spent. We use it as an opportunity to thank our donors. So, you know, those are just some ways that you can use an annual report again to just tell about your nonprofit, tell about your accomplishments from year to year.
There's a quick question about whether or not hard copies of annual reports are considered antiquated at this point.
I see both. I see both. Folks are still doing hard copy annual reports. That has not gone away. But typically, if there's a hard copy, then that PDF is uploaded on the website. That's typically what I see. I don't know if anybody else has a comment about that, but. Any more questions in the chat, Tracy? I mean, Rebecca, sorry.
Nope, that's it for that.
Okay, all right. If we could go back to the PowerPoint. In your packet, you have a handout and it's titled, "What is GAAP? Generally Accepted Accounting Principles." We've put the link in the handout page that we gave you, information sheet. And then all of what we have talked about in this session on financial management is identified in these basic tenets of the general accounting principles. And if you look at the bottom, the number 10 principle of utmost good faith is what that should be, good faith. So just being a good steward and keeping that in mind as we're trying to work through our, do the financial management part of our work each and every day, I think is very, very important. You can go to the next slide. I just wanted to point out that is there. But Tracy, do you want to speak about GAAP at all?
I don't think anything more than what you said, especially in the context of what we're trying to do today. But you know, it's just our guide to how we need to account for things in nonprofits.
And then the last thing that we want to share with you on this next slide is the idea of diversifying where your dollars are coming from. So all that we talked about I'm sorry, go back one. I missed internal controls. Let me go there first. Internal controls, and of course, an audit is an internal control, but it's also an external control. But maintaining, proper best practice financial management guidelines and policies, engaging in a financial review on a regular basis with the board and not separate from the board, making sure that those internal controls are reflected in the bylaws in terms of how financial management should be carried out in your organization. And then, of course, the audit, right, that our organizations experience. Audits can be expensive. So you want to think about that in terms of the size of your nonprofit and how to do maybe a extensive financial review, depending upon how large you are, what your budget is, and then also as opposed to doing a full-blown audit. Having an audit committee comprised of board members and staff is important, and then identifying a auditor or accounting firm that can help do that. It's always good if you have a board member that's a CPA or a part of an accounting firm to kind of help you with the cost of that. Tracy, I'm going to pass it to you on that.
Sure, and just a little bit about internal controls. Some more examples of that could be, I know that if you've got a small organization, it can be difficult to do that, but try to get creative. In our organization, we have someone who opens the mail that is not within the accounting department. Somebody makes a deposit that is also not within the accounting department because we're entering it into our accounting system. And so we're trying to keep those separations of duties across those tasks in order to make sure that we've got good internal controls. With the audit committee, sometimes you'll see, we've had this before at the center where we'll have like an outside CPA or financial expert that might also serve on our committee because it's another fresh set of eyes to review our audit in 990 for the year and provide feedback and input. So that's something that you could consider. And then just with your auditor in general, don't be afraid to reach out to them and ask them questions. Hey, we're doing this new thing. I want to make sure we're accounting for it in the right way. And touch base with them regularly, not just when they're coming in to do that audit or whatever financial review that makes sense for your organization. Somebody put in the chat about how internal controls would be reflected in the bylaws.
Yes, so remember your bylaws is it gives direction to the board, and it gives direction on how to manage and how to govern a nonprofit organization. Oftentimes a board will have a finance committee, and then definitely a board has as an officer a treasurer. And so elements around depending upon what you want to put in there, it can give some instructions on some of the fundamental or some of the essential elements of how managing your finances are carried out in your nonprofit. So that's what I mean by that. When you explain what your finance committee does and how it functions and how it works in partnership with the president and CEO and the ED and the person who's actually like Tracy, whose role or job within your nonprofit is to manage the finances. It's helpful to have some of those instructions, at least generally, in the bylaws.
And your auditors may ask you to fill out a slightly different document about internal controls or ask you questions about them as part of the audit process. So that's not unusual. And then somebody asked about would an auditor charge for a consultation? I think, as I just mentioned, where you're checking in. I won't speak for all audit firms, but any of the ones that we've been engaged with to perform our audit and 990 services, I have not experienced them charging separate for me to ask a question like that. If you don't have a, engagement with an audit firm and you have a question, Rebecca, I'll do a plug for our accounting assistance pro bono program, where the center can put you in contact with a CPA that could probably answer your question in their hour consultations that are free to members. So that's another option. If you had a question about how to approach something from a financial or accounting perspective.
Okay. And it looks like a question about the audit, like how often?
Yeah, somebody said the past couple of years, our auditor takes months and months to complete ours. I can just share my experience, and we've had a couple different audit firms since I've been at the center. It can take a long time. It depends on how the auditor breaks it down. Like, we go through sort of a planning phase. Our fiscal year is July to June. So in July, we might be doing some planning, some initial prep work. We do field work in September where they're actually on site. Last year it was virtual, but where they're actually on site doing a lot of their testing. And then once we finish that, we develop a timeline with them about when a draft is going to be complete. And that can take, if it's a week and a half of field work in middle of September, it might be the end of October before we get a draft back. But they work with us to develop a timeline in order to have a draft ready that has been reviewed by the audit committee by a November board meeting. And that just happens to be our timeline. So if you feel like it's taking months and months, I mean, it can be a long process, but I would definitely talk to them about your goals and timeline for when you need things to address that.
Okay. If we could go to the next slide, diversification of revenue. So the final point that we make here going into fundraising is the idea that your nonprofit should consider, if not already, diversifying where your dollars are coming from. So if there was something to happen with any one of those resources for money, you would not have to close your doors, basically. So, so in terms of thinking about that, fundraising, definitely, we're going to go into that topic, but also you may be offering a service whereby there's a fee for that. So that might be a way, or maybe there's a membership that might be a way in which your organization acquires revenue. The center has members and individuals. When they pay their membership dues, then that is a way in which dollars comes in outside of grants and other ways. And then, of course, we've talked about grants versus contracts. There is a difference there in terms of the resource or the source in which those dollars are coming from. And then investments. Your nonprofit may be at a place in its life cycle where it has endowments, or it has other investment products that it has acquired over the years that serves as a way to get dollars in to meet that budget we talked about at the top of this conversation. So I don't know, Tracy, if you have any comments about that.
No, I think you covered that.
Okay. Well, in terms of just looking at my clock here, it is right at 11:20, and we are up for a 10-minute break before we go into fundraising. Tracy, thank you so much for joining us today. You have been truly a value added to this session on financial management, and we appreciate you being here. If there are no any quick questions or comments or anything like that that you all have, then we're going to go into the break and report back at 11:30. Rebecca, I'm going to pass it over to you.
Great. Thanks so much. We'll go ahead and pause. We'll see you back here at 11:30. Thanks again, Tracy. We loved having you.
Of where you are with that information.
This is Monica again. I think for me, I have a CPA that's like the person that we contract with that is in office that does all our cost reports to our grants. We have 3 big federal grants that unfortunately is the majority of our revenue source, and they are reimbursable. So it has made me think critically about the process of diversifying our revenue. So I'm looking forward to the fundraising piece because our board is getting ready. April launches like our whole fundraising launch season from April to like October. So it's a good time for me to be getting this information. And then it really helped me. Sometimes like on the board of directors, the treasurer kind of is like lost and doesn't know what their role is. So going over like the balance sheets and the cash flow reports really helped me understand how I need to, unfortunately, guide my treasurer into understanding, okay, take these reports and this is what you report out to the board. It also made me think about who needs to be on the board in terms of it may be good to have a CPA on the board that can help take the information that my finance manager is producing and put it in layman's terms for board members who may not have the skill set or the language for understanding financial processes. So wheels turning. Look,
Gotcha.
Turn.
Good. And I think that is one of the examples. That is an example of how the president, CEO, or executive director serves as a resource to board members, because there's an element of managing nonprofits that we may have in these roles of leading nonprofits, because we have an understanding of how to do that our board members, where they may be highly skilled in their craft or in their field, but they don't necessarily know how to insert themselves into the nonprofit organization to be helpful. And so, I mean, if I could just say, that's why we're doing this institute, is because we know that there is a gap there for some of our executive directors as to, well, how do can I coach my board? Absolutely, you can, to kind of help them to fill those gaps that they may not necessarily understand, as you stated, Monica, what their role might be. And so when we see our board members not being as active, a lot of times it's because they just don't know how they fit in. And as an executive director, we're there to usher them in. So I don't know if there are any other comments about the financial management information.
This is Kelly with the Foundation for Health Leadership and Innovation. Dr. Palmer, I would just say I love, for me, last week's session on strategic planning and this week are so correlated, because one of the things for my organization is I know we absolutely have to diversify our funding. We're mostly funded by private funders. We do not have a lot of individual donors or really a development strategy long term. But to get to that point, I've paused those efforts so that we can first focus on strategic planning to be able to articulate who we are and where we're focused, to be able to then make those asks for financial stability long term. So to me, just pairing those two sessions together, and the next piece we're going to talk about fundraising, are really important in my thinking as I'm trying to map out how we do this long term.
Thank you. And that is one of the ways in which this institute is structured. You know, we have these topics in this particular order for a reason, and that is to help us all connect the dots in a way that makes sense in practice. So, yeah. So thank you for that feedback. One more. Anybody else? Just kind of where are you with the financial management information before we go into fundraising? Okay, well, we will move right along. So for our time together as it relates to fundraising, we are going to do this where you're going to do some hands-on work. So it'll be different than financial management. Financial management was more us presenting and sharing and explaining. We'll do that here as well, but we'll kind of go back to the way in which we facilitate these sessions with fundraising. So you're going to do some hands-on work, and then you're going to actually go into a breakout in about 40 minutes. So we're going to kind of work it that way in terms of just kind of how we deliver and how we facilitate this piece of information. So if we could go to our I think we're sharing the screen. We're going to use the whiteboard, and we're going to have you use the annotate feature. I know that was several weeks ago that we started off with using the annotate feature, but I'm going to let Rebecca and or Leslie. Has Leslie gone yet? I wasn't sure if she was still on or not, but.
Yeah, I've taken over. She has class that's up.
Okay. Great.
Right at 11, so I take over around 11 a.m. Yes.
And I don't know if our cohort remembers, but Leslie started with us as an intern last year with the Z. Smith Reynolds intern program. And then the North Carolina Center offered her a position coming into this year, I think, if I'm right, Rebecca. And so she's finishing up her senior year, and she graduates from UNC in May. So
yeah, so she's juggling quite a bit right now. But
she is
a great job for sure. We're really happy to have her and to see somebody come in and intern as an intern and get to hold on to them and hire them. So we're super excited about that. So I've gone ahead and I'm sharing my screen. You'll see a whiteboard on there. And when you go up to the top to your annotate bar, I believe it's under options, you'll see the text box option. And I believe the activity is to go ahead and enter into text box what fundraising is or how you would define it. Is that correct, Dr. Palmer?
Yes, if you want to let them practice using it first and then clear the whiteboard, that might
good
be
idea.
Good.
Yeah, go ahead, everyone. Go ahead and try to access that annotate with the text box, and you can put your initials in there just to practice. Or I see a drawing there. We want to text box available. Okay, good. I'm seeing good. That's great. Everyone's figuring out how to use it. Good. I'm seeing some. Oh, happy springtime. I like it. Great. Anyone not finding it, please raise your hand. All right, I'm going to go ahead and clear the screen. And we'll go ahead and
I think it comes in a little delayed, so you might have to wait until
they're coming in, and that's
okay. Oh, there we go. I gotcha. It's happening now. Yeah.
There they are. Should be seeing them coming in. I'm going to move them around if I can, so they're not on top of each other. Yeah, there we go. Nice.
So we are writing what comes to mind when we hear the word fundraising. What do you think of? You can't run for the nearest exit. You can't do that. So
Hmm.
Rebecca, I'll let you share some of these as they're.
Sure. Oh, and see, somebody's learned advanced skills of using a different color. I'm impressed. I'm impressed. Well done. Keep it interesting here. Try to move these around so we don't have too much overlap.
Wow.
Yeah, we're getting quite a few.
Yes, we are. Oh my. Yes.
So we've got, sorry, it's hard to do
We,
this.
we have a lot of thought when we hear the word fundraising, don't we?
Yeah, indeed. I can't wait for the folks who get to watch this recording. All right. Actually, Dr. Palmer, while I continue to move these around, do
You want me to
start
try to do it? Okay. All right. Show me the money. Monica has that in the chat. It's not on the whiteboard, but it's definitely in the chat. I feel you, Monica. I feel you. I am a part of a campaign right now or helping launch one. And whoo, it's like you just want to accomplish that goal, right? So bring it on. So we've got connecting the community and individuals to our work, telling your story and inspiring your donor, learning what matters to donors and connecting them to the needs of the community. Can I get someone from the group to help me read these? Anybody can turn your mic on and just go for it.
Sure, I'll do it. Creativity and targeted, sharing your story, inviting others to contribute to your mission and vision, building relationships, telling story, having fun, raising awareness, money with your community engagement, must create a compelling ask, building your finances, passionate about your mission, multi-channel solicitations, mail, email, crowdfunding, phone-a-thon, donor engagement to fulfill mission, search out opportunities, yucky, activity tracking, relationships necessary, relationship building with results that support your program impact, donor engagement to fulfill mission, and learning what matters to donors and connecting them to the needs of the community. So
thank you, Michelle, right? Thank you,
yes.
Michelle.
Yep.
Thank you so much. So, the long and short of it is that working in the space of fundraising, it looks different for every nonprofit. And so in your packet, you have three handouts, pages 1, 2, and 3. And one, we kind of highlight what fundraising is not, and then we define what it is, and then we lay out some pitfalls. So I'm going to leave that for you to kind of review. But a synopsis of all of that is that fundraising looks very different for each nonprofit. Some of your organizations have annual giving campaigns. I think Monica mentioned that they're getting geared up for theirs. That you have an annual giving campaign that happens like clockwork every year. Some of us don't have that, right, at our nonprofit. Some of us are trying to get there, and we're trying to identify and create whatever this apparatus is going to be to move fundraising along like we need it. So it does look different. In terms of, in thinking about fundraising as well, it is about promoting and in some ways salesmanship, but it's a lot about explaining the impact of your programs and the difference that your organization through your programs is making in your community. So impact is big. And we know that when we did our work on program design, management, and evaluation, we talked about outcomes and impact and accomplishing goals. And that program success or program achievement really helps us make the case for our programs. And being aware of the stats and facts that help us to better understand the issues that our programs are addressing or the issues that our nonprofits are addressing. Fundraising is friend raising. I see that in the information here that you've shared. It is about raising money and asking for money for our nonprofit. For some of us, this is a very tough part of our jobs because it's getting the no to your ask. Sometimes that makes it a little scary to even pursue. Some of your organizations have staff in place that actually do development. Some of your organizations do not. So we recognize that each nonprofit might have a different way in which it approaches fundraising. We should all be fundraising. Even if your organization, I think Monica said her organization relies primarily on contracts, but you also have a 501c3, so you can fundraise, you know, even in the midst of doing that. And you do want to diversify where your dollars are coming from to the degree that you can. Some of your nonprofits were started as a part of privatization of programs. And so therefore you are contracted with the government to implement those programs as a provider. So we get that as well, but it's on the table. Fundraising is on the table, even if historically your nonprofit has utilized contracts to fund the programs that you offer. And also if your organization has used primarily grants. So fundraising is on the table if you have a 501c3. It is on the table. How do we fundraise? We fundraise by identifying donors. We fundraise by identifying donors. And in identifying donors, we work through 4 stages. If we could go back to the PowerPoint. So we're going to work in these 4 stage areas of fundraising. And also prepare yourselves to use page, I'm going to get there in a minute, but to use page 6 and page 7 of your handout packet, because we're gonna focus on developing a list of prospects. So we're going to look at 4 stages of fundraising. The first stage is identification of donors. The second stage is cultivation of donors. The third stage is solicitation of donors. And the fourth is stewardship, or steward our donors. So the first stage is identification of donors. The second stage is cultivation of donors. The third stage is solicitation. And the 4th stage is stewardship. So we're going to move into identification. And Rebecca, I'm going to stay here. I don't want to go to the PowerPoint yet. I want to stay here with the gallery view for identification. When we get to cultivation, we'll go back to the PowerPoint. So what I want us to do is I want us to kind of practice. Some of you may be familiar with this approach, some of you may not, but I want us to practice a way, not the only way, but a way to generate a list of prospects that we're going to inquire with for an ask in terms of donors. So you also have in your handout packet, page 4, which is donor base. So if we're going to fundraise, one of the essential elements of fundraising is to have people to call upon to ask for money. And so we consider those individuals, if they haven't given already, as prospects. And so in terms of looking at page 4 of your handouts, we want to build a donor base if we don't have one. If we have one and it's kind of dormant, meaning we have a list of folks that we can reach out to, we want to reactivate that. And then if you already have this function in play and it's working for you, maybe there's some things that we can offer as I'm going through this that might help you enhance that. So this is what we are looking to do. And if you look at the bottom half of page 4, when we talk about who make up our organization's family or individuals that we might contact that can help us expand our donor base or set it up. It could be current board members or past board members. It could be individuals that we are in other clubs and social groups with. It could be our existing donors that might give us some leads to others. And on and on and on this list goes. It might be if you're generating a list of people who come to your special events, you know, you may go back to that list to see who on that list hasn't given to your organization as a donor and that you think you might want to inquire with. So we're going to walk through a process to help us to be able to do that. So go to page 6. This is a worksheet, and I'm going to guide us through how to use this. So, and I'm going to use the board of directors as an example, as kind of the group that is going to help build out this prospect list. So the prospect identification list would be created by every board member. It would be created. So every board member would get this. And they would list people that they know, 15 people. So I'm going to have you just list 15 people that you know, not for any particular reason, just how many people, what are the first 15 people that come to mind for you that you know? It doesn't matter if it's colleague, family, friend. It doesn't even, I mean, you could have just met them in the airport this morning, but how many people do you know? So you're going to give me 15 people. And I'm going to silent here for a minute. And okay. Of those 15 people that you know, that you listed, how many of them believe in the mission of the nonprofit you represent today? You're just going to give me a check mark. How many of them believe in the mission of the nonprofit that you represent today? How many of those 15 people? When you get to the bottom of that list, believes in the cause or the mission or vision of the nonprofit you represent today, give me a total number at the bottom of that column. Just write in however many out of the 15 believe in the mission or vision of the nonprofit you represent today. And then of the ones you checked, of the ones that you checked, how many of them give money to other things that they believe in that you know of? How many of them actually give to other things that you know of that they believe in? Now, theoretically, what we know is that most individuals who are a part of a faith organization, like a synagogue, a church, etc., most individuals give to that entity first. You know, so if that's a part of their lifestyle, then typically they give first. If that individual also gives to another organization, what comes in second is their educational alma mater, be it college, be it high school, be it elementary school, be it preschool. You know, if they are connected to any educational entity and they are interested in giving or they give, theoretically, what we know is that that entity comes second. And then, of course, it's fair game maybe with who they give to next. So when you're looking at this list of individuals who actually give money, you might also want to consider, what are they already giving to? Just to kind of gauge that. Now, of those individuals that give away money to things that they believe in, how, if you were to approach them and ask them for a donation to your nonprofit, what would you ask them for? How much would you ask? How much would you ask them for? We already know they give. We already know they believe in giving because we've already identified them as such. So how much would you ask them? I see a comment in the chat, they would start at $100. One thing to think about, typically when you are launching a campaign, typically you create a giving structure. So typically you create giving levels. So you would factor in whatever your giving level structure is, you would factor that into how much would you ask them for. So if your giving level was $100, 75, 50, 25, 15, of that giving structure, you would identify how much you would ask that person for. So that giving structure becomes relevant there. Again, we're identifying prospects. So now when you get to the end of that last column, how many individuals are you potentially, you could ask for money? So we've got this picture now. We've got all these people we know. We've identified who believes in our cause, mission, vision. We've identified whether or not they already give money away. And we also know if they are affiliated with a educational organization, they may already be given to that. Especially if they wear t-shirts and sweatshirts and hats and all the paraphernalia that goes with said educational entity, we know that they may possibly be given. If nothing else, they're buying a lot of product, right? And then we also know if they have any affiliation with a faith-based entity, they're probably giving to that. So those two typically come, they give to first, people give to first. And if you think about it, think about yourself. When you give, what do you give to? And in what order? And what is the priority? So we've got that. That's our prospect identification list. Now we're going to go to page 7. We're going to go to page 7 in your packet. And we're going to transfer those that you've identified how much you would ask them for. We're going to transfer them to page 7. We're going to transfer them to the master prospect list. Here's a point that's important. When you get to this juncture, remember we started off with being a board. So imagine if all 42 of us were one board and each of us had at least 3 names of individuals that we had already indicated, meaning we kind of screened and vetted them already, we've already indicated how much we would ask them for. Those would be the names we would transfer to that list. If all 42 of us had at least 3 prospects, 3 times 42 is what? 126. Did I do the math right, Rebecca? Thank you, Arlene. She's thumbing up, they're showing me a thumbs up. So that's 126 prospects for this cohort. So we would transfer them all to that master prospect list. We have 100, hypothetically, we have 126 prospects. We're going to identify who's going to actually contact that individual first, because it may not be you. You may know them, but you might also know someone else that knows them better. And that's who you would actually get to solicit that gift, right? To contact and or solicit that gift. And then you're going to decide how much are we going to ask in that solicitation. And then that last column is if there's any other additional information that you might want to note about the individual that you've listed in terms of prospect. Let's go back to that contact solicitor difference. The person who contacts the prospect may be different than the person that solicits, or it may be the same. It may be different or it may be the same. People give to people. So we want to make sure we have identified the person who is more than likely to get the yes on the gift. So that's the framework in terms of thinking about donor prospects and identifying donor prospects. Any question about that exercise? You can do this with your board, and it can go fairly quickly. Comments about that before we move on to our next piece of information.
This is Monica again. I just want to offer, we
Did this last year. One of our board members is really great with fundraising, and she came in and did like a whole presentation, and we literally in the meeting had to list like 10 people, and the board meeting was us calling. We exchanged lists, and everybody called the people that were on each other's list. We raised, in addition to doing that and having a donor base, we were able to raise like $41,000 just by calling people. So from like April to July, like we could, first time in 20 years the agency had ever done anything like that and raised that amount of money. So we're hoping for a repeat.
Of course. And when you call this time, we're going to upgrade them, right? We're going to ask them for more than they gave last time. Just a little bit more than they gave last. We don't want to scare them away, but we're going to ask for just a little bit more than we asked for last time. Thank you for that. Thank you for that example. So it's a matter of doing it. That's really what it's a matter of. And what a great space to do it during the board meeting, right? Great space to do it. It's not an extra meeting. You know, everybody's already there anyway. Everybody is on their cell phones anyway, either texting during the meeting. No, I'm just kidding. But anyway, everybody's already there. You know, you got your device out. You might as well call someone or text someone and ask them to give a gift. So that is exactly what we're talking about when we do this, and we're doing it annually. And ideally, you're doing it around your annual giving time period. And hopefully, if you don't have an annual campaign, hopefully you're going to start one, because and you can set your goal and at a particular amount and then grow it. You know, try to grow it every year. Rebecca, if you would take us to the PowerPoint and go to, so that was identification. That was identification. Now we're going to go to cultivation. So now we have these names, and now we have this prospect list. We've identified who the prospects are. We also want to consider the existing donors. We want to consider them. And then we want to analyze the donor giving that's already happening. So prospecting is we're trying to add to or create that donor list. If we already have an existing donor database, then we want to go into that database and we want to analyze their giving so that when we make the ask, we have some indication of what their history has been with us, and we base that ask on that. And then we're going to communicate with those donors. We're going to reach out to those donors, and we are going to do the solicitation. So you can go to the next slide. In the solicitation phase, we're going to make the ask. So we've got the list, we've identified who's going to solicit, we've identified how much we're going to ask for. We're going to make those calls or send out that communication, whatever communication device we're using, we're going to make the ask. And then we're going to nurture that inquiry. If we were told to call them back, if we got the yes, we're going to send the thank you letter or note. We're going to engage in those donor relations. And I'm couching this around the annual campaign. Again, if you don't have an annual giving time period for your organization, I would highly consider you begin to think about that. So once we solicit that, in your packet of information, you have a people's rules of fundraising. It's page 5 that you can reference into just kind of how we think about inquiring with people to give. People who ask for money become better givers. We understand there are times when people want recognition or just acknowledgement that they actually, that you received their gift. The best people you can ask for money are people who are already have given money. And so that's important to keep in mind as it relates to that. The next document I want you to reference for solicitation is Donor Bill of Rights. That is page 14 in terms of just thinking about how we should approach donors and the best practices when we interact with donors. This is a quick reference for you here in terms of these items. If I could parlay this back to financial management, it's important to have your budget for that next fiscal year. It's important to have produced the budget so that it can inform you as to what your goal needs to be for the annual campaign. So your budget would come, a little earlier than your kickoff for your campaign so that you can go ahead and know how much money you need to raise. So if I could kind of bring the financial piece back to that. In terms of stewardship, you've got your, we should thank our donors in terms of donor recognition. And we also put a fundraising worksheet in your packet just to outline the stages and the different things you might do as it relates to that. You were going in the right way. You were, well, yeah, it's back up. It's page, hold on. In terms of stewardship, it is page 8 and 9. Well, that's thank you. Yeah, it's page 9, the worksheet. It is the worksheet. So we just kind of gave you a tool that you could use if you're building your donor base, if you're sending a direct mail, if you're doing a personal solicitation for a gift, capital campaign, like what would you do to identify? What would you do to cultivate? It would be different. And this is where fundraising becomes customized to your organization. So we've put that there for you to use in terms of stewardship, recognizing donors and definitely looking at how you're going to approach acquiring those donors. The next piece of information is donor communication. If you could go back to the PowerPoint. So we've got the solicitation. We're talking about stewardship. We've talked about that. Now, what I've added here is this donor communication. How do you communicate with donors? It's important to identify that. How do you advertise and market and promote? You may use traditional methods. Social media is the inexpensive way of getting the word out to your stakeholders. And that is if your stakeholders are using social media platforms to communicate. So that you have to kind of pay attention to. Some of our more seasoned donors may not be as savvy with some of the social media platforms. So we have to really kind of pay attention to that. And then who are we communicating with or to? Individual donors, our grantors, our volunteers, our board members, our staff, and the community at large. So we have to kind of think about how we're going to get the word out that we are in need of dollars through our fundraising campaign. So we want to think about that. The next thing I want to talk about, and we're going to go into breakouts and do this, is fundraising programs. I keep talking about annual campaign. Annual giving is fundamental to raising money for nonprofits. And we use a imagery of a pyramid to kind of describe this pyramid of giving. And in doing so, there are different types of giving programs, which means there are different types of fundraising that align with our different programs. So if you go to page 10 of your handouts, page 10, page 11, and page 12. 10, 11, and 12. Pull out 13 because we put this in as this is the foundation. This is the foundation. We build our donor base. We're doing some direct mail. We're having some special events. And there's the personal solicitation for gifts. So we want, if you're not doing those things, we want to create that. We want to build that. And we typically do our annual giving relying on these things that we have listed here. So in terms of thinking about that, to better understand and learn about our pyramid of giving, types of giving, and types of fundraising, we are going to send you on a scavenger hunt in your breakouts. So you've got 1, 2, 3, page 10, 11, and 12. And you also are going to need page 19. In your breakouts, you're going to fill out page 19. So you're doing a scavenger hunt using the 3 handouts, 10, 11, and 12. The first item you're going to answer is you're going to identify the number of giving programs based on the information you're given. What are these giving programs? And then what is the donor type based on what you see here? And then the giving program that matches with that donor type you think. And then what does the pyramid symbolize? So you're going to do this in a breakout session. Your breakout is going to last 7 minutes. I know. I saw Julie's eyes go, whoa. So your breakouts are going to last 7 minutes. You've got 3 documents that you're using to help you answer the questions. And I know I have not given you specifics about habitual, impulse, and thoughtful, right? But I want to see what you come up with, okay? So Rebecca is going to send us to breakouts. You're going to use the scavenger hunt activity sheet, page 19, and you're going to reference 10, 11, and 12. Identify a person that will speak for your group. We'll do just a little bit of that, maybe 1 or 2, just for the sake of time. But the point is for us to become more familiar with giving programs. Fair enough? We ready? Into breakouts we go.
All right. All right, opening up the rooms. So Dr. Palmer, I'll go ahead and send the note that the breakout rooms are closing at 12:20.
Yep.
Okay.
Thank you.
Mhm. And we have six breakout rooms.
We'll hear from 2.
Yeah,
We'll hear from 2.
that's fine.
Yep. Are we going to stay on a little bit when we're
Sure, we can.
okay? Yeah, that'd be good.
Yep.
Thank you.
Mm-hmm. You bet. And we're back. Welcome back, everyone.
Okay, great. Well, I think we're still populating, so I better wait. Hi, Sarah. We have a guest.
Oh.
Okay, I think we are back. So if we could hear from one group, how you filled in your scavenger hunt worksheet. We know there were 6 groups, but we're going to only hear from one. So.
All right, well, I'll go for our group since I got told right as the room was closing. So we had identified 3 giving programs, the annual, major, and estate giving. And everybody felt that annual giving was more the impulsive or could be habitual, more habitual, but could be impulsive.
Mm-hmm.
That major giving is more thoughtful and can be habitual. Mm-hmm. And estate giving is more thoughtful.
Yes. Awesome.
Did we get 100% on our quiz?
You got that. You got that. What was the last one? The symbol. What did you all come?
It represents giving types and the possible weight of what amount of giving may come from that category.
Yes, that for sure. And definitely the hands on deck. And the base is this donor base. You know, we need a donor base, no matter how small or large. We need to have that donor base, and we need to be interacting with those donors on a regular basis to maintain a relationship, and not just when it's time to ask for money, but throughout the year. We need to create ways of being able to do that. If Rebecca, can you go to the PowerPoint for me? What did you all think about the scavenger hunt as she's switching screens?
It was a good conversation starter to start discussing the ideas about how each of us approach it from our different organizations.
Okay. And hopefully the handouts are helpful as guides to help you better understand what each are, and then also the different ways in which you can implement those types of giving programs. Two more thoughts I have that I want you to think about, and we'll pick up here too. We'll be finished with fundraising, but we'll reflect in this regard when we return next week. Fund development strategies. So when we're thinking about fund development, we consider grant writing. A lot of us don't consider grant writing fundraising, however. Fundraising in my mind and grant writing are just two different ways in which we can bring monies into the organization. Strategy is different. I do see it as fund development, but not necessarily as fundraising. So definitely it can bring dollars in. Earned revenue, renting out space, selling services, offering something up for sale is definitely a way to think about fund development. And then also social entrepreneurship, meaning we're engaging in a business venture for the purpose of social impact. That's what we mean there. So we're engaging in a business venture for the purpose of social impact. So you might bring on a particular type of service or resource that is entrepreneurial to your nonprofit, but yet it's making a social impact. And we'll highlight some examples of those next week when we meet. And then the last point about fundraising is the human resources to, not fundraising, but fund development, meaning overall fundraising included, is that paid staff are involved, volunteers are involved, our board is involved, and you might, if you have the resources, you may even engage a consultant to help around fund development. For today and for this institute, we focused on the fundraising stages and specifically honing in on prospecting. And then we looked at specific programs, highlighting the annual campaign as being fundamental to any fundraising overall program and strategy. And then kind of closing out with, how do you communicate with your donors? And what are some fund development strategies that you might be able to utilize? And then what are the human resources necessary to be able to engage in that way? If we could go back to the gallery, I think. I always like to get a sense of things before we close out. You can write in the chat or you can share by unmuting yourself. We've covered fundraising and financial management today. Collectively, where are we? Where are you? Give me a temperature gauge as to where you are as a participant in our institute.
I'll share, Dr. Palmer.
Sure.
We've covered a lot of territory. For me, it's also very timely, some more so than others. For example, finance was very important, and the timeliness of it for today is works out really well for me. I need time to digest and think, and I know as I work through a lot of this information that was shared and the strategies we need to put into place, I'll generate more questions. I'm almost feeling as though when all is said and done after the last session, we need some sort of a networking group so that as we start digging into the information, we have people we can rely on who have been through the same training to maybe help us through some bumps or difficult times or something like that. But it's been wonderful. The information has just been just fabulous, so important, so timely.
Thank you for your feedback. Anyone else? I do see some comments in the chat. So Rebecca,
Yeah.
and we can, I'm sorry, go ahead.
No, go ahead.
Oh, okay.
I was just going to speak to that cohort group. The center is looking at different online communities and exploring those and seeing how we can continue to have a sort of a networking group for our Nonprofit Management Institute graduates in the future, and the concept of potentially having a sort of like a reunion gathering at our next conference, if we're able to have it in person at the end of the year, fingers crossed, in a safe way, that we might have a breakout session time for our institute graduates to go ahead and get together and chat and check in with one another and spend time sort of socializing and whatnot. So more to come on that, but that's a good thing to raise, I think, at this point. So thanks.
I love that idea, and it brings me back to how much I loved Center Connect, and I know that that's going to go away at the end of the month, and I'm really, really sad about that. And I want to challenge us to think about, as we're creating other groups and things like that, and having these other networking opportunities, there are a lot of spaces that are already out there like that. So how can we be intentional about collaborating and sharing the expertise that we have, while also celebrating the fact that we are a specific cohort, right? Rebecca, the idea that you shared about the conference is great, but understanding, like, from my perspective, and we've shared this, like, YMPNers may not have access to the conference because of the price point. So in terms of thinking about, like, how we're going to continue to keep the information circulating and how we're going to stay in touch, I'm excited to see what comes from that. Because all this information for me is just, it's incredible. Like, I feel like a grown up. I mean, I am like a whole adult here, but I feel like, okay, I know what I'm doing in the nonprofit world. And I'm hoping that I can share that with my other team members as well.
Yeah, it is next level. Arlene, I'm hoping that we can count on you maybe for a sort of ad hoc task force to help us figure out what the next Center Connect is, maybe.
I'm so excited about that. Yes.
Good. Thank you. I have a quick hand raise from Veronica.
Hi, everyone. I wanted to thank you so much for all that you have taught me in just these few short weeks. I feel completely overwhelmed and yet also incredibly hopeful of all this information that I've been learning here. It has given me some great starting points in the areas where my nonprofit just doesn't have some of these strategies in place. So I'd be starting from scratch while at the same time learning this organization and being so new to it. So that's where it's overwhelming, but I'm very hopeful because this has given me a great resource on where to get started, where to focus. And I definitely would love to hear more from the rest of the group and keep in touch. It sounds like there's a good group here, and I think we can all be great resources to each other and friends as well.
Great. Thank you. Well, with that, shall I close us out real quick? I know we're about 2 minutes over, so I'm going to go ahead and put the link for today's survey in the chat box so you have that. I want to also mention that for next week, we'll be covering human resources and graduation. So a couple of things real quick about graduation. You'll receive a separate wraparound email to prep you for graduation. There will be an opportunity or an invitation to leave a quick recording, about 30 seconds to a minute, about your experience in the Institute that we will compile through this software called Montage. It creates a nice sort of closing video, which the last year's one was really great if you got a chance to watch that. And then we'll have some graduation themed Zoom backgrounds that you can download and use for your background. We'll take some class pictures. We will send you a list, contact list with everyone's mailing address, and we'd like you just to confirm that your name is spelled the way you'd like to have it on the certificate, that your mailing address is where we should send these items to you. And we typically get those out within the next month after we finish the session. So our hope would be to get these out to you all in April, by the end of April. So with that, thanks again for joining us today. We look forward to seeing you at our next and final session next Tuesday, and hope you all take care. Take care. Bye.